Two people start with the same salary. One saves money, the other invests. After 10 years, one still struggles with money, the other builds real wealth. And the difference? Just one decision: investing. If you're living in the USA and don't know where to start, this video will show you a simple, step-by-step roadmap to start investing in 2026. Even if you have zero experience and very little money. Let's be honest, most people don't invest because they think it's too complicated, they think they need a lot of money, or they're afraid of losing everything. But the truth is, you can start investing with as little as $20. And the earlier you start, the more powerful your money becomes. This is because of something called compound growth. Your money starts making money, and that money makes even more money over time. Step 1. Build your financial base. Before investing, you need a strong foundation. Think of it like building a house. You don't start with the roof, you start with the base. Do these first. 1. Create an emergency fund. At least 3 to 6 months of expenses. 2. Pay off high-interest debt, like credit cards. 3. Control your spending. Why? Because investing while in debt is like trying to fill a leaking bucket. Step 2. Define your goal. Now ask yourself, why do you want to invest? Retirement, buying a house, financial freedom. Your goal decides everything. For example, long-term 10+ years more stocks. Short-term 3 to 5 years safer options. Experts say your investment strategy should match your timeline and risk level. Step 3. Open the right account USA. This is where most beginners get confused, but I'll make it simple. You have two main options. 1. Brokerage account. Flexible, you can invest anytime. No tax benefits. 2. Retirement accounts, best for beginners. 401k if your employer offers it. IRA, Roth IRA, or traditional IRA. Many platforms today have $0 minimum balance. No commission fees. So yes, you can literally start with small money. Step 4. What should you invest in? This is the most important part. Most beginners make a mistake here. They try to pick the next big stock. That's risky. That's stressful. Instead, start simple. Index funds or ETFs. These are basically a collection of many companies in one investment. For example, S&P 500 gives top 500 companies in the USA. This gives you diversification, lower risk, long-term growth. Here's a realistic beginner strategy, step by step. 1. Open account. 2. Deposit money. 3. Buy a broad market ETF. 4. Invest regularly every month. 5. Don't touch it. That's it. Simple. Let me tell you something important. Investing is not about being smart. It's about being consistent. Example, if you invest every month for years, your money grows exponentially because of compounding. Starting early is more powerful than investing large amounts later. Mistakes to avoid. If you want to succeed, avoid these mistakes. Trying to get rich quickly. Day trading without knowledge. Investing in hype crypto, meme stocks. Panic selling when market drops. Many beginners fail because they get overwhelmed or chase trends, instead of staying consistent. Realistic expectations. Let's be honest, investing is not magic. You won't become rich overnight, but historically, stock markets grow over time. Average returns can be around 7 to 10%. Yearly long-term mindset. The goal is not fast money. The goal is slow, steady wealth. What you should do after this video. If you're serious, do this today. 1. Open a brokerage account. 2. Start with small money. 3. Invest in a simple ETF. 4. Repeat every month. Even $50 a month is enough to start. Let me leave you with this. Most people spend years thinking about investing, but never actually start. And that's why they stay stuck. You don't need perfect knowledge. You don't need a lot of money. You just need to start. Because 5 years from now, you will either say, I'm glad I started investing, or I wish I started earlier. If you found this helpful, subscribe for simple finance videos.